What up, guys? This is KOJOFOREX, aka GBP Legend, aka Sniper Trader, aka the Lonely Trader, aka King of Blues. I'm back again today. I'm gonna be giving you guys my simple tips about trading psychology. I know a lot of people have been coming into my DM literally asking me, Kojo, how do you handle your trading psychology? How are you able to hold the market throughout catching 500 pips, 250 pips, 100 pips, and so on? Literally from the point of view that they are able to only catch 15 pips and then they are panicking and literally running out of a trade. So today I'm just going to break down all the dimensions about handling your trading psychology and then be able to watch your trade materialize to the possible level it's supposed to reach. One thing I keep telling a lot of people is that there's really nothing like trading psychology, right? So what do I mean by there's nothing like trading psychology? As bizarre as it may sound, trading psychology literally has everything to do with trade management, right? So rather than trade management, people confuse their inability to manage their trades properly, right, which has to do with money management, risk management, to trading psychology. What do I mean by that? Imagine that you start a trading account with $1,000 and then you're supposed to risk 1% per risk, 2% per trade. And then what literally means that if you risk 1% or 2%, if you lose a trade, you're going to lose minimum $10, $20. Is that really going to hurt your $1,000? Not much. And then would that really make you panic and then want to leave a trade and then all this kind of psychological hurdles? Definitely not. Why? Because you're really trading under proper risk management. So because of that, you do not really panic and want to leave out a trade. So it has everything to do with really putting your lot sizes in check, right? So sometimes I explain to people that coming into the market, there are various ways to make it, right? So you're literally imagining that, Kojo, if you're saying that I should risk 1%, 2% on $1,000, how am I going to buy the Lamborghini? How am I going to buy the Ferrari? How am I going to buy the Benz if I'm supposed to be making profit of $10, $20, $30, right? So you must understand that in this market there are actually three dimensions. I like to put them in three dimensions of how to really make it in the forex market. Usually I like to say coming in small and going in big, or coming in big and going in small, or coming in small and catching huge pips. So I'm going to break all these three steps down for you to understand, and it's going to really help your trading psychology and let you prepare for the worst case scenario, any decision you want to take in the market. So what do I mean by when I say coming in big and going in small, coming in small, going in big? When you come into the market, number one thing you have to prioritize as a trader is the knowledge, right? So before anything else, before understanding trading psychology, what should I do? You must make sure that you have the trading knowledge. The knowledge is a priority. And what do I mean by knowledge as well? Knowledge is finding an edge in the market. Knowledge is not really about learning about what is market structure, what is this and what is that and what is that. There are so many theorems in the market, but at the end of the day, it's not the theorems that trade for you. It is the knowledge you have there and then the edge you have that trades and makes you profit, right? So edge is a probability of one thing happening to another. So before you can be able to make it in this market, you should have an edge, a strong one, a high probability one. 60%, 70, 80, right? Anything above 70, then you are on your path to success in this market. If you're falling below 50, maybe your win rate is 50%, 40%. Trust me, you got to put in a little bit of work because it's not really going to jeer you towards that high probability level of winning in this market, unless of course you are probably using a trading strategy that has insane risk to reward ratio, which we're going to go into probably in another video, right? So if you have a trading strategy that has insane risk to reward ratio, which I mean by possibly risking maybe 5 pips to catch 100 pips or 10 pips to catch 200 pips, regardless of how bad your win to lose ratio is, you're definitely going to make a headway in this market, right? I'm going to delve deep into that probably in another video. So coming in small and going in big, what I literally mean is that, let's say what 90% of retail traders fund the account with, right? 90% of retail traders fund the account with let's say the $500, the $200, the $1,000, right? Let's say anything below $2,000 is what majority of retail traders fund their trading account with. So if you come in with this kind of money that you want to make a living from the market, you must understand the dimensions involved. If you're really risking that 1%, 2%, it may only buy you a burger at the end of the day, or perhaps some McDonald's, right? And you may not necessarily be able to live out of that trading account. So what you want to do is that, like I said, the constant thing here is that you have to find an edge in the market, and an edge requires you to constantly practice. It could take you 6 years. It could take you 6 months, 1 year, 2 years, 3 years to practice. And once you gain that consistency and you know that you're very good at what you do, you can go all out. Right now, you have your small account coming in small, going in big. Because you have an edge in the market, you don't mind risking that 10%, 20%, 30%, 40%, even 50%. Sometimes you can go all out to put out full margin, which is not recommended, right? But that is the only way you can make a headway. But before you make that headway, you've already accepted the risk involved, right? Then you can now flip that little bag, grow it into a huge amount, and possibly now revert to using proper risk management and going all out. What is the other way around? Let's say you already have a firm foundation financial wise, and then you're coming into this market with, let's say, a $10,000, $20,000, $30,000. You do not need to have the same psychology that somebody who's coming in with $100, $200 has, right? This time you have a huge capital, so you need to really manage your risk by coming in big and then going in small, right? In the sense that if you risk your 1%, 2% on a $100,000 account, you're literally risking between $1,000 and $2,000 per a single trade, right? And that makes a worthwhile amount of money. So in that case, as a trader, you do not need to over leverage your 100,000 account, 200,000 account, because you can make consistent living properly above the average person with that kind of amount. So in this case, you're coming in big and then going in small in terms of your lot size and risk management, right? And the last way is coming in small and achieving or accumulating huge pip movement, right? So in that way, and that is actually the safest way for small account traders, right? Especially for people that come into the market with the $500, $200. The best way to make a headway in this market is, let's say you come into the market targeting 100 pip trade, 200 pip trade, 300, 500 pip trade and stuff like that. Then you can make a headway. In that way, it allows you to be able to come in small with your maybe 0.2 lot size, and you're targeting 200 pip. That make a worthwhile amount of money, right? It can literally double your trading account if you have a $200 and then you're able to catch a 200 pips using 0.2 lot size, right? It literally doubles your account. And that is the kind of way you can also achieve different level of success in this market, right? So it will take a little while for everything to condense in your mind. Perhaps I've said a lot and then you're trying to, balance it all out. But if you really take your time, probably rewatch this video, then you can be able to understand exactly my 3 ways that I stipulate for making it in this market. So at the end of the day, you realize that what I've said has everything to do with trading psychology, right? And then the psychology really matters with the lot sizes you are using. So at the end of the day, trading psychology equals risk management, right? If you use risk management, you are not going to panic on any trade. You are not going to fret. You're not going to, be doubting yourself and stuff like that. But if you're going all out, full margin, number one, you must have understood what you're doing. But if you do not understand what you're doing, it is never recommended for you to go all out, and that's where your psychology is going to be messing up and you losing on a trade and not really watching your trade materialize, and the other all errors that a lot of traders make, right? So yeah, that makes it for this short psychology video. I hope you loved it. If you really loved it, you got to do me one favor: subscribe, like this channel. I'm going to be dropping more and more content. I've planned out a whole lot of trading educational videos. This is just one out of thousands that is coming, and then you guys are going to find real value. Also, make sure to click in the link in the description to join the KOJOFOREX Telegram community. I've been dropping a lot of free content, free trades that makes a lot of people make a lot of money. Last week we caught trades on gold, on euro, on GBP, and people made tons and tons of money. Also, make sure to follow me on all social media at KOJOFOREX, KOJOFOREX, especially on Instagram, because I've been holding a lot of Instagram lives and I've been dropping so many games out there. So if you really want to be a part of the KOJOFOREX community, then you got to make sure to follow my Instagram account and also join the KOJOFOREX Telegram channel. That's where you're going to get more interactions with me. So without much ado, I'm going to end this video here. I hope you found value, and I'll see you guys in the next video. Peace out.